Rogier, thanks very much for joining us. Just give me your sense of the outlook for the Dutch and Benelux markets for 2021.
2021 is probably the most difficult year to predict we've seen so far, because we are so much depending on recovery, on vaccinating, and on the effect of what happened last year. And so the big question is, when will the pandemic crisis turn into an economic crisis? When will state support stop? And you may have seen that unemployment and bankruptcies have been at a long-term low last year due to the state support that we have seen. So the interesting thing will be what the real effect is. And I don't think that we will see that before the second or third quarter of this year.
And what are you seeing, Rogier, in terms of the sectors?
Before the pandemic started, we started to focus on residential portfolios and supermarkets. And coincidentally or not, those were the markets which remained stable during the past 10 months. So it was easy for us to execute those transactions. Of course, also partially supported by the increasing real estate transfer tax at the end of the year. And on top of that, we will keep on cherry picking in the office market and partially also in the retail market, where the office market is probably the most interesting part, because there it is really difficult to see what is going to happen. Many people are still at home. We believe that most of the employees prefer to be in the office and to be together with colleagues, to exchange thoughts, generate ideas. That is typically something what you do in a physical meeting. So when it comes to offices, we believe that the market might look a lot like the end of the financial crisis, where core markets remain strong, and that is where we will keep on focusing on. So it's again a question of quality. On retail, it's a whole different story. First of all, supermarkets. The outlet center market in the Netherlands is relatively small. We currently have only 3, and there are 1 or 2 under construction. But the inner cities will definitely survive. The only question is at which rent level. If people consume more online, then they will probably still visit the cities, but they will consume less. We've seen that when it comes to retail, the concepts which combine e-commerce with the physical shops are those who generate most of the profit and who have the best outlook. But the profit is not generated in the shops. So the next question is, how much rent is a shop owner willing to pay to the landlord? But it's still kind of a safe haven, but I would not exaggerate the price. Obviously, logistics looks like it's going to stay hot. There is, of course, a question if the price is still right. And we are seeing a lot of yields between 3 and 4%, which is, well, for any asset class, quite low. And there are a couple of dangers in there. When there is a big gap between construction costs and value, there's very often a bubble in there. The second thing is that price is often, of course, a balance between supply and demand. Well, there is obviously demand, but there can be a lot of supply since there's still enough greenland around, especially in the east of the country. So where it comes to logistics, we remain interested, but probably more in the Randstad, where land is not rarely available and where there is more demand for space.
Do you still see residential and also, I guess as part of that, student housing, senior living, those kinds of areas of growth?
My personal opinion is that when it comes to student housing, a lot of developments have been realized over the past years, and it remains to be seen if there is sufficient demand to pick all that up. In more general, there is a huge imbalance between supply and demand when it comes to affordable housing. And that's not a question of money. That's a question of regulation and, again, availability of land. So as soon as land prices are right and permits are given, then these houses will be built. But the imbalance is that large that for the coming 10 years, the market will not be able to compensate for the lack of supply. So it is a safe haven. And we try in any case to pick up those assets which suit more target groups, smaller households on the right locations, perhaps even converted offices as long as they are on the right locations. What we've seen last year is that we've actually three kinds of RISI. We have converted offices, newly built, mainly apartment buildings and single family homes. And a lot of older portfolios have been traded. On the older portfolios, you have to take into account the sustainability measures that has to be taken in the coming years. On the newer buildings, of course, you have to deal with development financing, which is either coming from us or via forward funding from the buyer. And when it comes to converted offices, I think we have kind of reached the peak.
I think that affordable housing side and some of those ESG parts of it are going to be really big trends for 2021. Thanks for joining us, Rogier.
You're welcome. Thanks a lot, Richard.